Thanks for tuning into this week's SoCal Multifamily Sales Pulse. The SoCal Multifamily Sales Pulse is a weekly blog post that reviews the past week's multifamily sales, stats, rents, absorption rate, and sale metrics for all 5 Southern California counties plus Long Beach. Make sure you're on my email list so you never miss the report. This week in What's Happening in the Market. Apartment investors and operators expect a great 2022, and here's why. With hopefully the worst of COVID behind us, apartment investors are optimistic for 2022. Here are the key trends that will shape new multifamily investment and development in the coming year. Number 1 is back to the city. Big cities once again are attracting renters who crave social interaction, culture, and entertainment. Number 2, focus on existing assets. Factors such as COVID, work from home, migration to the suburbs, the tight labor market, rising construction costs, and supply chain issues all suggest a continued focus on existing multifamily deals. In particular, value add deals, workforce housing, and affordable product being super hot throughout 2022. At number 3, an appetite for redevelopment. The decline of regional malls accelerated by COVID and online shopping patterns will continue to create interesting multifamily redevelopment opportunities in 2022. Another multifamily redevelopment opportunity that may take off in 2022 involves office buildings that are experiencing increased vacancy. The wild cards are the effect of the regional government regulations, and the interest rates are expected to rise in 2022. The question is, by how much? The first couple of weeks of 2022 have seen strong weeks of closed sales in Orange County. Looking at the monthly charts, the total number of sales increased in December from the previous month. Looking at the number of active listings, the increase in the number of monthly closed sales occurred even with the inventory levels declining to the lowest point in the last 4 years. Looking further at the monthly new listings, dropping to its second lowest point in the last 4 years. The increase in closed sales is even more of an indication of an extremely strong demand for Orange County multifamily real estate. Even though there has been a gradual increase in days to sell over the last couple of months. Okay, let's look at the Orange County sale of the week. The Orange County sale of the week was a 6-unit building in Orange on Palmyra Avenue, and this property was originally listed at $2.9 million and it sold for $2.4 million in 75 days. The property was built in 1964. The major cross streets are Main Street and Chapman Avenue, and the property consists of 2 side-by-side triplexes. Each triplex consists of 1 3-bedroom, 2-bath, single-story unit with a fireplace, and then 2 1-bedroom, 1-bath units. There are 6 enclosed garages. The property sold for $485 per square foot, and the average price per square foot in the city of Orange is $516. The property sold at approximately 27.9 times gross, but the existing rents were extremely below market. There was approximately 44% upside in the rents. Using market rents, the gross rent multiplier would be projected at 16.1, and the current cap rate was 2.5%. And using the projected cap rate, using market rents, is 4.3%. The sale is an example of a deal that was created out of a listing that was overpriced to start. The final sales price was negotiated to a realistic price based on the property's true value. Okay, let's look at this week's Orange County deal of the week. This is a property that is currently on the market, available for sale. This is a 6-unit building in Fullerton on Porter Avenue. The property is listed at $1,759,000. The major cross streets are Euclid Street and Orangethorpe Avenue. The property was built in 1958, and the building consists of 6 one-bedroom, one-bath units. Rents are approximately $1,500 each, putting the gross rent multiplier at 15.9 and the cap rate at 4%. The price per square foot, based on the list price, is $447. The average price per square foot in Fullerton is $535. The building has recently undergone substantial renovations that include new dual-pane windows, exterior paint, new garage doors, and extensive fascia board repairs. The building is professionally managed by a third-party management company. Units are separately metered for gas and electric. Take a drive by the property, and if it fits your investment criteria, let me know if you're interested in making an offer. There was a further decrease in the number of listings and the number of new listings, which dropped to just 19 new listings last month. We're now at the lowest point of listings in the last 4 years for Long Beach multifamily. Even with this drop in inventory, Long Beach multifamily saw an increase in the number of sales monthly. The days to sell average dropped back down to the level of the previous months after the sizable increase last month. The monthly absorption rate dropped from 2.36 months previously to just 1.4 months currently. The Long Beach sale or deal of the week is a triplex on Loma Avenue, and the property is listed at $899,000. This is a really good price for a triplex in Long Beach. The property was built in 1920, and the major cross streets are Redondo Avenue and Pacific Coast Highway. Most units have undergone some remodeling over the last couple of years. A buyer could spend more money on new landscaping and a driveway to fix up the exterior and improve the curb appeal. The units are separately metered for gas and electric, and water meters have been installed for each unit. However, they have not been connected yet. By connecting the water meters and therefore reducing the expenses, the property would generate a nice cash flow. The units consist of a 2-bedroom, 1-bath, a 1-bedroom, 1-bath, and a studio unit. Take a drive by the property, see if it fits your investment criteria, and let me know if you'd like to make an offer. All right, the monthly activity charts for Los Angeles County are showing a slight uptick in the days to sell average over the last 3 months. The number of active listings has fallen over the last 4 months, and the monthly number of new listings dropped to its lowest level in the last 4 years. With all the stats of inventory falling over the last few months, surprisingly, the monthly number of sales has increased over the same period. Los Angeles County's multifamily absorption rate fell from 3.39 months in the previous month to just 2.4 months currently. The monthly average cap rate and average gross rent multiplier were basically unchanged. Okay, let's look at San Diego County. San Diego County's monthly absorption rate went from an already low 1.25 months previously to just 0.6 months currently. San Diego County's absorption rate is the lowest out of all 5 Southern California counties. Looking at the monthly stat charts, the days to sell average was unchanged at 31 days. The number of active listings dropped again for the fourth straight month. The monthly number of new listings dropped to its lowest level in the last 4 years, with just 51 new listings last month. The monthly number of sales fell for the second consecutive month, but remained at a level common to what we've seen over the last 2 years. The monthly average cap rate increased from 4.73% previously to 4.78% currently. The monthly average gross rent multiplier dropped slightly from 14.08 to 13.98. Okay, looking at Riverside County, after previously being at 1.78 months, Riverside County multifamily's absorption rate is currently at 1 month, trailing only San Diego County for the lowest monthly absorption rate. The monthly average cap rate increased from 5.5% previously to 5.81% currently. The monthly average or monthly activity charts show that the days to sell average moved up slightly, and it's still in the same range that it's been over the last 9 months. Just like everywhere else in Southern California, the number of active listings has dropped over the last 4 months and is now at the third lowest level it's been in the last 4 years. The monthly number of new listings fell to just 31 new listings last month. And Riverside County also is seeing a higher number of monthly sales and hit a 4-year peak with 52 sales last month. Okay, looking at the monthly stats and charts for San Bernardino County, the monthly absorption rate dropped from 1.95 months previously to 1.22 months currently. The monthly average cap rate and average gross rent multiplier were unchanged. Looking at the monthly charts, the days to sell average has been on the uptick over the last couple of months, but it's still at a point of where it would be considered average. The number of active listings has dropped considerably and sits at its lowest point in the last 4 years. The monthly number of new listings dropped to just 31 new listings last month. This is the lowest number of monthly new listings ever, and has been common throughout most of Southern California. Even with a lack of listing inventory, the monthly number of sales increased from the previous month. All right, to wrap things up, thanks for watching this week's SoCal Multifamily Sales Pulse. You can look at all the charts, stats, and closed sales in detail in the full report on my website, MikeLembeck.com. And if you're interested in seeing more stats or sale metrics, let me know and I'll see what I can do to add them. For this week's wrap-up, the listing inventory throughout Southern California has continued to decline. Most areas are seeing the lowest inventory levels ever. Months of inventory have declined to just 2 months in Orange County and Long Beach. The monthly absorption rates are hovering around or below 1 month or slightly above. The closed sales average days on market for the most part remains between 30 to 45 days. With the number of listings declining, the active listings dollar volume has also dropped. Listing inventory should rebound as we move through the first 2 months of the year and head into spring and summer. Remarkably, we've seen the number of weekly active listings moving to active under contract status hold pretty steady throughout the last couple of months. Average cap rates and average gross rent multipliers are seeing minimal change. In most cases, buyers are looking for a good deal, and they're forced to try and create deals by negotiating astutely. So Feel free to give me a call or shoot me an email with any questions on the market, or if you're thinking of selling a property you currently own. I'd be happy to give you an evaluation on the property and an honest opinion of what the next best step is for your investments. And if you're having a hard time locating an upleg for your exchange, we have access to lots of inventory using the Delaware Statutory Trust as a way of satisfying your 1031 exchange requirements. And don't forget to subscribe to my YouTube channel, Mike's Multifamily Minutes, so you never miss a video. See you next week.